Hello, and welcome to Car Insurance Chronicles, a podcast where we discuss and demystify the world of cars and car insurance in order to help you make informed decisions as you navigate the roads around you. I'm your co-host, Brenda.
And I'm Andrea. Today, we're talking about a topic that's becoming increasingly important: insurance for rideshare drivers. Whether you drive for Uber, Lyft, or another service, understanding your insurance needs is crucial. We'll break down what coverage is provided by these companies, the gaps in coverage, and tips for making sure you're fully protected while on the road.
First, let's start by looking at the unique situation rideshare drivers face. When you drive for a rideshare company, your personal auto insurance may not fully cover you while you're working. That's because personal policies generally exclude coverage when the vehicle is being used for commercial purposes.
Exactly. That's where the confusion comes in. Rideshare drivers are technically using their personal vehicles for business purposes, which creates a gap between personal insurance and what's required for commercial driving. To address this, companies like Uber and Lyft provide some level of insurance coverage while you're on the clock, but it's not as simple as it sounds.
Let's break it down. Most rideshare companies provide insurance in 3 distinct phases. The first phase is when you're logged into the app and waiting for a ride request. During this time, Uber and Lyft typically provide limited liability coverage. However, they usually don't cover any damage to your vehicle in this phase.
The second phase begins once you accept a ride request and are on your way to pick up the passenger. In this phase, the coverage increases significantly. Both Uber and Lyft provide liability, collision, and comprehensive coverage while you're en route to pick up passengers. But keep in mind, this coverage typically comes with high deductibles.
And then there's the third phase, which is when you have a passenger in the car. This is when the rideshare company's insurance is most comprehensive. It generally includes higher liability limits and full coverage for both bodily injury and property damage.
So, while rideshare companies do provide some coverage, there are gaps drivers need to be aware of, especially in Phase 1 when you're waiting for a ride request. If you're involved in an accident during this phase, the rideshare company's coverage may not be enough to cover all the damages.
That's right. In fact, some rideshare companies may only offer liability coverage in this phase, which won't help you with damage to your own vehicle. This is why many insurance experts recommend purchasing additional rideshare insurance or a rideshare endorsement on your personal policy.
A rideshare endorsement essentially fills the gap between your personal insurance and the coverage provided by Uber or Lyft. It ensures you're covered whether you're waiting for a ride, on your way to pick up a passenger, or driving them to their destination. Without this, you could be left paying out of pocket for repairs or medical expenses in the event of an accident.
It's also important to remember that each state has different regulations regarding rideshare insurance. Some states require rideshare companies to offer a minimum level of coverage, while others don't. Make sure you're familiar with the specific rules and insurance requirements in your area.
Now let's talk about some tips for ensuring you have the right protection while driving for a rideshare service. First, be upfront with your insurance provider about your rideshare work. If you don't disclose that you're driving for Uber or Lyft, your insurer could deny any claims related to an accident that happens while you're working.
That's a key point. You don't want to be caught in a situation where you need coverage, only to find out your claim is denied because your insurer wasn't aware you were driving for a rideshare company. Being transparent helps avoid complications down the road.
Another tip is to regularly review your coverage limits. If you're using your vehicle frequently for ride-sharing, it might make sense to increase your liability limits or add comprehensive and collision coverage. This could help you avoid high out-of-pocket costs if you're involved in an accident while driving for Uber or Lyft.
Lastly, consider the deductible. The rideshare company's insurance usually comes with a high deductible, so it might be worth setting aside extra savings in case you need to cover it. You don't want to be in a position where you can't afford to get your car repaired because the deductible is too high.
In conclusion, driving for a rideshare company like Uber or Lyft brings unique insurance challenges, but with the right knowledge and coverage, you can protect yourself financially. Make sure you understand the gaps between your personal and rideshare provided insurance and consider purchasing additional coverage to stay fully protected.
And remember, the insurance landscape for rideshare drivers is constantly evolving, so it's a good idea to stay updated on any changes in coverage or state regulations. Thanks for joining us today. Until next time, drive safe and stay informed.